I think the price of silver needs to go up at multiples in order uh, for people who have silver to get rid of it so that people that need the silver can get some. I personally, unless I need to, am not going to sell my silver. I'm going to hold on to it. But some people might. If we're at $300 silver in 2 months' time, I'm sure a lot of them will sell. But it's difficult to say at what price, Elijah, things are going to balance out in terms of supply and demand. So yeah, it's not just inflation.
Gold and silver are no longer just rising assets. They're becoming stress indicators for the entire financial system. Price levels that once sounded impossible are now being discussed openly, not because of hype, but because inflation, debt, and physical supply constraints are colliding at the same time. Despite sharp volatility, the big picture hasn't changed. If anything, it's becoming clearer. What we're witnessing in gold and silver isn't speculation. It's a repricing of reality.
I think you were talking to me before we started that we have a danger of hyperinflation. And I think that's why, because there's no way that they can rein in the debt and, contain inflation. If anything, they're going to keep fooling the public about what inflation is. And they're always going to find someone else to blame for it, like maybe Iran or China, but not the Fed, of course. With the price of, let's say, take $90 silver. I know we're a little bit below there, but $90 silver, that's worth 65 fiat dollars. Do you really think that's going to go back to being like one fiat dollar? I don't. If anything, next year when I'm speaking with you, that's going to be worth maybe 100 and, let's say, 50 fiat dollars. So yes, I heard that Rick Rule is selling some of his physical silver, but he's going to buy silver miners. So, and in that sense, I agree, because the silver miners are heavily undervalued versus silver. And I'm sure Rick Rule has a lot of physical silver, so it's not like he's going to get rid of all of it. But for us smaller investors, yeah, I would hold on to my silver unless there's an emergency. And I would also continue to stack as much as possible, because I hear that the U.S. Mint as well is limiting the supply that it mints of silver coins, and other mints as well around the world. So I don't think it's going to get better. I think so too, especially for retail, like you say, because the whole world, especially governments around the world, are realizing how important not just silver, but all natural resources are, and how the supply chains are being disrupted because we're not in a multipolar world anymore. So I think the big guys, governments and central banks and sovereign wealth funds, they're going to have access to silver before retail. So yeah, I think retail needs to realize that if they're sitting on the fence waiting for a correction, I think that's a bad strategy. I think dollar cost averaging or exchanging fiat for real money whenever you can is the best strategy. Yeah, I do. And it's not just because of inflation. It's because of the supply, especially with silver. I know there's a lot of silver in the world from past production, but it's in places that is really hard to get and recycle. But so right now, yeah, there's a desperate rush to get physical silver. There's a huge shortage. We've seen the mining supplies not match the demand for the last 5-6 years. We've been hearing, you probably heard of this rebalancing of a commodity index, that it was going to crash silver. And despite that, silver's already up 20% like roughly 20% this year, and we haven't even finished January. Gold as well is up a few percent. So I don't think it's going to stop this performance. Of course, there will be some sharp corrections along the way, and you just need to sit through those, I think.
The gold and silver markets are approaching levels that challenge not only historical precedent, but the foundations of the modern financial system itself. What used to sound extreme is now openly discussed because the drivers are structural, not temporary. Gold remains elevated after a multi-year advance, and silver, despite violent pullbacks, continues to outperform most asset classes. Even sharp drops, like silver's recent slide from the low $90s, are increasingly viewed as tactical corrections, not trend reversals. According to financial analyst and economist Mario Innecco, this price behavior reflects a deeper imbalance in silver that paper markets can't resolve. Weakness in price is not a signal of falling demand. It's evidence of fragility in leveraged, paper-based pricing systems. Silver will not come to market at marginally higher prices. Long-term holders will only sell at multiples of today's levels. And that's because silver is not just money, it's also a critical industrial metal. In this environment, price isn't simply a reflection of value. It becomes a rationing mechanism. Inflation plays a role here, but not in the conventional sense. The issue isn't just rising consumer prices, it's ongoing currency debasement that official inflation metrics fail to capture. With global debt at historic extremes, central banks are boxed in. Tightening policy meaningfully would destabilize the system they're trying to protect. At the same time, physical supply constraints are worsening. Mining supply has lagged demand for years. Mints around the world are limiting production. Recycling remains constrained. And governments are increasingly treating natural resources as matters of national security. This shift favors sovereign buyers and institutions, not retail investors. Physical premiums in Asia and the Middle East already exceed Western paper prices, signaling that real metal is far scarcer than headline inventories suggest. Historically, every major precious metals bull market is marked by silver outperforming gold. That's exactly what we're seeing now. Gold provides monetary stability. Silver provides acceleration. Volatility, then, isn't a flaw, it's the cost of transition.
I always think of trying to get as much of both with my fiat. So, but if people have a lot of silver and they've done really well and they don't have any gold and they want some exposure, why not? Get rid of some silver to get some gold. I don't have anything against that. But the other important thing about the bull market, you need to see silver outperforming. And that's what we're getting. So this is, I think, in my opinion, just the beginning. And I don't know how long it's going to take. But if you look back to 1933 and 1980, when the credit cycle bottomed, the Dow gold ratio, 1933 was 2-to-1, and 1980 was close to 1-to-1, and we're still just above 10-to-1, the Dow gold ratio. So I think there's still a lot of room in the precious metals bull market, especially relative to the stock market. Yeah, China and India, they're buying a lot of physical silver. Also, the Gulf cooperation countries, which is like Saudi Arabia, UAE, Qatar, Bahrain, and Kuwait. They had a deal with China back in December of 2022 to cooperate in building their infrastructure. And it even mentions photovoltaics, which is for solar panels. So yeah, all these countries are buying a huge amount of physical silver. In the West, the LBMA and COMEX is more of a paper market. And I think that's why the price of physical silver in Shanghai is higher than the Western prices, because it's for real physical silver. And that's why the Chinese as well, they've put export controls since the 1st of January this year on exports of silver. And yeah, I think it's about $10 premium over in China. And then you can also, I mean, when you take delivery in China, you pay VAT. But Eric Young, who's also known as King Kong, he does a very good job of differentiating the price with VAT and the price without VAT. And even without VAT, I think silver's trading around $100. I think today it's sell about 101 on the Shanghai Gold Exchange. So that's why it's happening. It's because it's a real physical market in the Middle East and the Far East and in India, while here in the West, it's still kind of a hybrid, but eventually I think there's no way that the price in London and New York won't catch up to the price in China or even India. I think there's a 17% premium. Well, I guess you could argue that it helps the bullion banks because they're mostly short. So if the price goes up, well, they will need more, I guess, margin, but also the longs. If the market goes their way, they will need more margin. But like you said, you're right. It's fair because the bullion banks are going to be losing more and they're going to have to pay more. So yeah, it would punish them more. You're right. And in the end of the day, we might see COMEX become almost a physical market if they keep raising the margins and the margins keep getting bigger. Yeah, but the other thing as well, I think an exchange, and I'm giving them some credit here, an exchange needs to make sure that it's not in danger of bringing down other counterparties in the exchange because of volatility. And I think that's why they raise the margins usually because of the volatility in the market. Yeah, I think for Wall Street, and I've read about this, a lot of the major players on Wall Street, from banks, fund managers, they say it's a dangerous situation because it, how can I say, it affects, it chips away at the Fed's independence to set rates as they're supposed to contain inflation. Even though, Elijah, I think the Fed is an inflation machine, but the majority of people in the markets and on Wall Street think otherwise. But that's a different topic. So yeah, it's seen as infringement on the Fed's independence. And people worry that if Trump or the DOJ really goes after Powell, it gives a really dangerous signal in the future. It's not totally just about Powell, is about the next Fed chairman or chairwoman. They would be thinking twice before doing something radical to perform, the objectives that they should follow from Congress of maintaining price stability and full employment. So yeah, it's a danger. And I think it's one of the reasons why, I mean, not the sole reason, because gold and silver were doing well anyway prior to the announcement from the DOJ. Yeah, and I know Trump has been pressuring Powell, but he's kind of left him alone right now. And but even if we didn't have this attack on the Fed by Trump, I don't think the fundamentals for gold and silver or precious metals in general would change, because the underlying problem we have is too much debt, and that debt can only be serviced and sustained by even more debt being issued or more reserves or money being printed by the Fed, and more borrowing done by the U.S. Treasury, by the U.S. government. So I don't think fiscal policy and monetary policy are going to go tight anytime soon.
This argument doesn't rely on collapse or a single trigger event. It rests on continuity. rising debt, constrained supply, and declining confidence in fiat money. The real question may soon shift from whether higher prices are justified to whether current prices still underestimate what's unfolding. If you found this breakdown useful, make sure to like, subscribe, and share it with others watching the gold and silver markets. Stay informed, stay balanced, and I'll see you in the next one.